Ladies and gentlemen, good day and welcome to the Bandhan Bank Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ritesh Mehta from Bandhan Bank. Thank you, and over to you, sir. Mr. Ritesh, please go ahead.
Thank you, Ranju. Good evening, everyone, and thanks for joining this call. It's a pleasure to welcome you all to discuss Bandhan Bank's business and financial performance for the quarter ending June 22. We will take this opportunity to update you on the recent development in the industry and Bandhan Bank during the quarter. To discuss all this in detail, we have with us our founder, managing director and CEO, Mr. Chandrasekhar Ghosh, our CFO, Chief Financial Officer, Mr. Sunil Samdani, our head assets, Mr. Kamal Batra, our housing finance side, Mr. Suresh Iyer. Now I would like to request our founder, MD and CEO, Mr. Chandrasekhar Ghosh, to brief you all about bank's operational and financial performance along with the developments for the quarter ending June 22. Over to you, sir.
Thank you, Ritesh. Good afternoon and namaskar to all of you, and thank you for your time to joining today. I hope all of you and your loved ones are safe and healthy. I am pleased to state that the April to June 2022 quarter has been a balanced quarter for the bank. I will take you through the key figures. Quarter 1 of the financial year is a lean period for the financial services industry, and therefore the quarter-to-quarter comparison shows a minor dip. It is no different for us. So that I am trying to give this the figure compared to the first quarter of the last year to this year first quarter. The overall advances have shown 20.28% growth year-on-year and a marginal decline in the 2.71% quarter-on-quarter. Why is the decline? Primarily due to the quarter-on-quarter decline because of microcredit book declined to the 6.8%, which is the seasonality of the bank. And second point on that, there is a flood of this Assam. That is the two cause. And third cause is coming on that because of the RBI have the new regulation has come and impacted on that the 1st April, effective from 1st April, so that 1.5 months is a delay. So that is the 3 points have been given this, the decline of this, the quarter-on-quarter growth of microfinance. But if we look at loan growth other than microcredit, it will be the 4.3% growth on quarter basis. The very good point I have been mentioned in here, the 27% of the year-on-year growth has come to our housing vertical. This is a very big achievement have been done, and that you've seen that the last 3 quarters, the vertical have been growing very good, and it has been very helped us to increase the secured loan of the bank. And this the vertical 4.5% growth have been given this quarter and this quarter-on-quarter basis. Even in a muted quarter, we have managed to show good growth in the housing finance book. We are planning to grow is more than that growth in this financial year and future. The retail loan book, other than housing finance book, consisting of personal loan, gold loan, two-wheeler loan, and auto loan, has grown 61% year-on-year and 9.1% quarter-on-quarter. That is also the second focus of the bank to grow in future. The commercial banking vertical, consisting mainly NBFC, SPL, and the SME loan, with 81% year-on-year growth, which is the quarter-on-quarter growth has come 3.2%. So these the other than microcredit, These the three verticals have the future growth will come to the bank, which can be diversify the bank portfolio across the all verticals, which we are projected strategically. The growth of this segment is a welcome sign for the bank, as this is in line with the bank's portfolio diversification agenda. The first quarter of the current financial year saw economic growth revive strongly as many businesses returned to normalcy, given the significant increase in the confidence among the population of managing COVID. We are happy to see signs of strong demand for credit in the most of the business in the first quarter. Due to the implementation of new regulations, growth in microcredit little bit is muted. Coming to this, the liabilities part. Our deposit has grown 20.33% year on year, and CASA also have been grown 21% year on year. So CASA ratio has come 43.2%, which is 160 basis point higher than the last quarter. The retail deposit is our focus, which is 78.4% in this quarter, which was in the earlier quarter 77.3%. So that we mean in here, the liabilities growth also has come very good, strong, and given a focus on that, will be continue our retail deposit and CASA deposit in future to manage our advance growth. Along with the business growth in advance and deposits, we have also seen very encouraging collection efficiency trends during the quarter. The overall collection efficiency of the bank has come 97% in quarter one. If I come to this, the microcredit, excluding NPA and restructuring, overall EEB collection efficiency is 98%, which is a very normal collection efficiency. West Bengal is 98%, Assam is 95%, and rest of India 98%. If I go to this including restructuring loan, excluding NPA, overall EEB collection efficiency 94%, West Bengal 94%, rest of India 96%, Assam is 78%, which is means on that the flood is little bit impact has come to the collection efficiency. Microcredit loans that have been disbursed after the second wave of COVID till June 2022, 99% of our customers are paying back. Our NPA is just the less than 2% in that portfolio. This shows that the loans given after the COVID second wave are mostly standard and are as per our usual pre-COVID experience. That is having given the strength of the bank, the future, our growth of this microcredit will be not like to again any of this the critical position on that. With the people's livelihood coming back on track, we have observed and engaged among our customers to standardize their accounts in order to continue to enjoy the benefit of formal credit by maintaining a healthy credit record. We have seen strong collection efficiency despite the flood in Assam. For the first quarter, our gross NPA ratio stood at 7.25%, which was in the last year first quarter 8.18%. Net NPA has come 1.92%, which was in the last year first quarter was at 3.29%. We see that the business growth, customer confidence, credit demand, and we have the confidence on that. We'll be like to continue our net NPA less than this amount, which is 1.92. We are more than covered in terms of our provisions. Total provisions of the bank as on cumulatively as on Q1 financial year 23 is 8,847 crores compared to 8,197 crores in the last quarter. This makes our PCR is a 75%, but if it is a PCR with a pro forma include, it has been 101%. Bank has not taken any restructuring in this quarter, and we have also not feel that it is needed to future, and there is no write-off we have been done this quarter. During the Q1, the bank has seen improvement in the gross net and the net NPA level compared to the Q1 of the last year. But on a sequential basis, we have seen some increase in the NPA figure, mainly due to three causes. One is a restructured loan. Though the restructured customer, 57% are paying MFI role because of the delayed disbursement and the Assam flood. Bank has seen total fresh slippage 1,125 crores, which was the lower than the last quarter, which was the 1,365 crores. Within our fresh slippage in the EEB segment was 908 crores in the Q1 versus 1,181 crores in the last quarter. Most of the fresh NPA which we are seeing in this quarter are the ones to whom we have lent during the COVID period. Many of our customers have been paying regularly and have nearly regularized their overdue account. But until the entire overdue amount is not recorded, they cannot be categorized as a non-NPA customer. Finally, in the first quarter, we have seen that the 73% of our NPA customers are paying and 57% of our restructured customers are paying, which given that the confidence to us, the gross and net NPA future will be come down. No fresh slippage happen very big way on that. It is only the matter of time because customers are paying, these two type of customers, they are paying not in a full all, they are paying the partial installment, so that there is a swing on that some of the bucket of their risk. But their interaction with us, we see that they are giving the confidence to us, they will take some time but repay that full amount on that. With the business growth and improvement in the collection, we have seen our profit growth has come 138% year on year, which is this quarter has come 887 crores against the net profit of the last year in the same quarter 373 crores. Sorry. Our net interest income has shown a growth of 19% year on year. It has increased the 2,514 crores in Q1 financial year 23 from 2,114 crores in Q1 financial year 22. Our net interest margin for the current quarter is 8%, which is the range of our expectation. Total credit cost for the quarter financial year 23 is 2.7% compared to the last year first quarter 7.2%. I like to mention in here the credit cost and NPA percentage has given the confidence to us that we will be like to continue in the record in this financial year. Coming to this outlook for the rest of the year, as you all know, we are seeing the economic activity picking up and business coming back to normal across the country. The bank has a focusing on that the business growth in this financial year, which is that the pre-pandemic situation, and credit cost I already mentioned and NPA is stabilized, and diversification is our core area. We are like to continue to do it so that housing, retail other than housing, and SME, we also like to continue to grow on that. All these together, we see that this quarter we are added 6 lakh new customer. So bank is growing, not only that the existing portfolio growing, that is also new customer adding, and then our liabilities and asset both are making growth on that. I wish you and your family all the very best. Please take care and stay safe. Thank you for all of you to listen me, and you have the question, you can.
Thank you. Thank you, sir. Now we will have an opening remark from our CFO, Mr. Sunil Samdani. Over to you, sir.
Thank you, Ritesh. Good evening, ladies and gentlemen. I will take this opportunity to run you through a few slides of our presentation. Starting with slide number 5, which talks about the EEB collection efficiency. Here we are talking about collection efficiency excluding the restructured portfolio to make it like-to-like and comparable with the previous quarter. So as it's visible, for the month and for the quarter, West Bengal and rest of India, the collection efficiency stands at 98%, and Assam for the quarter is 95, but for the month of June is 93. Assam had been impacted by floods in the month of June, and hence the June collection efficiency is lower. We are seeing an improvement there starting July, and we hope that by September we will reach to the pre-flood level as far as the Assam collection efficiency goes. If we talk about the share, the paying customers, the customer paying profile, 94% of our customers pay their full installments, 1% are not paying, and 5% are paying 5-part installments. The similar numbers, including restructuring, is available. It's on the same logic, so I will not read the same. I will go to the slide number 7. Here we talk about the NPA customers and the restructured customers' payment pattern. How are they behaving? As far as NPA customers go, 73% of the customers continue to pay us either in part or in full, and 27% of the customers don't pay, those who are already in the NPA bucket, which is a healthy sign, which means the recovery from NPA will continue to happen, the recoveries and upgrades. Now coming to the restructured customers' paying pattern, about 57% of the customers have paid part installments in the quarter, and about 43% of the customers have not paid their installments. Slide number 8, we talk about the Bpd movement. Here you will see the increase in Bpd. That's largely because of the restructured customers' demand getting generated from April onwards, and the impact of Assam floods in the earlier bucket. Other than the restructuring impact, the Bpd movement has been less than 0.3 to 0.4 basis point in each of these buckets. Now coming to slide number 9, here we talk about the stress pool and the coverage analysis. What we've seen is the total stress pool, which the way we calculate here, which is the restructured NPA, SMA1 and SMA2 for the EEB portfolio, stands at 121 billion. And against that, we have a provision. Now, before we get into the coverage, let me explain this pool of 121 billion. You will see the restructured amount at 21.4. That's because half of these restructured customers, the demand has started, and those customers are either in current or the SMA buckets or the NPA buckets. Accordingly, what we show here as restructuring is only those customers which will come out of restructuring in the current quarter. Those who have already come out, their positioning is on the respective SMA buckets or the current buckets. Now, as against this 121 billion, we have a provision of 76 billion. So the coverage on the provision has improved by 3% quarter on quarter. We've taken the extra provision of 335 crores this quarter, which is over and above required provision to improve the coverage. So of the total provisioning line item of 640 crores that we have for the quarter, 335 crores is the additional provision over and above the required provision that we've taken. The CGFMU recovery stands at 25 crores. The first claim we will make in the first week of October, and that claim will be roughly in the range of 1150 to 1200 crores. And the estimated recovery we expect going forward to be 25 billion. Recovery, as you all know, for us, the second half is more focused on the recovery. The recoveries in the second half is much higher than the first half. So we are confident of this recovery going forward as well. And of course, the diversification side, which Mr. Ghosh has already spoken about, so I will not take much of your time. Thank you very much for your patient hearing. Happy to take questions.
Thank you, sir. We'll now take question and answer. Over to Renju.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sameer Bhaisi from JM Financials. Please go ahead, sir.
Yeah, hi. Thank you for the opportunity. Just a few questions, primarily on the other income bit. Is there any MTM angle to the lower other income during this quarter?
So the other income is lower primarily because of two reasons. One is on the treasury portfolio. In the previous year, same quarter, I'm comparing it with Q1 of FY22 because Q4 clearly it's not comparable because disbursement in Q4 is almost 4 times of Q1. So the processing fee is very high in Q4. So the better comparison is Q1 of FY22. So there in Q1, we had booked a profit on sale of investments of 174 crores. This is the movement from HTM to AFS that we do once in a year. So that sale has not happened this financial year due to adverse yield curve movement. And secondly, the mark-to-market provision that we do, in Q1 of FY22, there was a reversal of mark-to-market provision of 86 crores. So effectively, in Q1, there was a 270 crore income on the treasury book, whether it is on sale of investments or mark-to-market. Against that, there is a mark-to-market provision or loss that we have done of 79 crores this quarter. So that is effectively 330 crore movement if we compare last year same quarter to this quarter. The second piece is on the PSLC income. This quarter, our PSLC income is lower by almost 130 crores compared to last year same quarter. That's because we've not sold PSLC this quarter, particularly on the agri portfolio, where we are awaiting a clearance from the regulator. The moment we get that, in the second half, probably you will see an uptick in the PSLC portfolio as well. So these are the two main reasons.
Okay, thanks. Just talking about PSLC, the annual report also mentions that there is a change in the recognition of priority sector loans. Could you please elaborate? Because the outstanding PSL eligible loans have come down on a YOY basis, so that would be helpful.
So this pertains to, in FY 1920, the RBI had an observation that we don't have the land records for our agri portfolio. So clearly, a bulk of our agri portfolio comes from microfinance customers, which are landless laborers. So in such a scenario, there is no question of having a land record. So accordingly, we had represented to RBI explaining the positions as to why we cannot have the land records here. But since this was an observation in the 1920 report for which there was a demand raised to deposit the funds in RIDF in Q4 of last financial year. So accordingly, we had deposited the RIDF there. In 2021 and 2022, there is no such requirements.
But the assessment is complete for 22?
We are yet to receive the report, final report, but the assessment is complete and we don't expect that to come in for FY 22.
Okay, and just one final thing, if we look at the Bpd movement, in the 61 to 90 bucket, West Bengal shows quite a bit of a jump. Is it primarily the restructured book of that state, or is there something else to it?
No, it is the restructured book. Excluding restructured book, the movement is less than 20 basis points.
Okay. And just one final thing. Do you think there is a case for revisiting the credit cost expectations that you had put out in the previous quarter around 200-225 basis points?
We've kept it at 2.5% and we continue to keep it at 2.5%.
Okay. Thank you and all the best. Thanks.
Thank you.
Thank you. Next question is from the line of Adarsh Parasrampuria from CLSA. Please go ahead, sir.
Hi, thanks. Sunil, just dwelling a little in this PSL part, when we go through the annual report, it's the FY22 PSL loans which seem to have, compliant loans seem to have dropped from 88 to 58 or some percentage. Just wanted to understand, does this have a bearing on how the bank's PSL income would be? Because your stock of PSL compliant loans as marked for FY22 is down. So just trying to understand if this can be a issue for our PSLC income.
So there are two things here. We have conservatively not considered the piece of agri pool, which is the non-allied agri part, as PSL, based on the RBI observation of 1920. Once we have the clarity on that, then, and if it is on the positive line, which we expect, then this pool can go up and accordingly we can look at PSL income. But at this stage, we will not be able to confirm either these.
And just to clarify, your FY21 and 22 PSLC income was how much?
So my FY22 PSLC income was about 650 crores.
Got it. And if it is adverse, like a large part of this goes away, or how does it work, or you can still get a material part of this?
So about 150 to 200 crores is what we can look at.
If, okay, your income, so you may lose about 400 to 500 crores, is it?
Yes, that's the worst case scenario.
Got it, Sunil. And now coming to the DPD movement, right? So the 2100 crore of restructured book, that's something that starts to service the debt in this quarter, or how is it?
So yes, that will start this quarter.
So it seemingly, when you look through the numbers, majority of the restructured book has found its way into the DPD buckets, and there is a restructured book which still is not servicing. Two questions here. One is that going by the same experience, most of it could be DPD. and then some of this DPD is late stage, so your NPAs will likely rise in 2Q and 3Q, right? As some of this goes along. So just wanted to understand if we should have ideally provided more, or you seem comfortable because you will get those guarantee-related recoveries that are expected.
If I say one point, then Sunil can be add on that. The beginning on that, our restructured loan is a 7,400 crores. And we are now, balance has come 4,600. So more or less, even 3,000 and a half, which is more than around 50% of the loan recovered and customer are paid on that. And second point on that, those are outstanding are pending. There is a 57% of that the restructured customer are paying. And their payment maximum are given as a, because of they given the partial amount, so that automatically they are going to movement to the different DPD bucket. So we are with the confidence on that they are coming back because of they have need in credit for running their business, and it has been started the business from the second quarter, which is before the festival, and that is a hope on that they will be returned back. This is my confidence on my customer.
Yeah, thank you, sir. So specifically to your point, as I mentioned, these are part paying customers, hence the DPD bucket. We can see them moving the DPD bucket. But on the provisioning side, I think we are adequately provided. On my entire restructured book, I have an 80% coverage already provided for. Right? And I have a position where 53% of the customers are paid. And top it up, we have the guarantee cover, which is over and above this. So on the whole, I think we are adequately, more than adequately provided, and hence we are sticking to our credit cost guidance.
Got it, Sunil. And my last question is on the operational changes done to comply with RBI's norms, right, in terms of how you underwrite. Can you just walk through what all changes was required? Are we fully done, and now it's back to disbursements as usual, or what were the changes?
Yes, the changes were broadly on the household income identification and recording and calculation of FOIR. So which we used to do as part of our individual lending customers, which was roughly 20-25% of our network. Now we have to do it for 100% of our network, which is the household income calculation and the FOIR calculation. So that training for the entire network has happened, and that is why the first 30-40 days of the quarter, the disbursements were muted. And now we are back to normal, both on disbursements with the new guidelines.
Got it, Sunil. This has been helpful. Thanks.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. And the next question is from the line of Kunal Shah from ICICI Securities. Please go ahead, sir.
Yeah. So first question on restructured pool. If you can just share the movement of this restructured pool. So 4,900 crores becoming 2,100 crores. So this 2,700 crores, how much is recovered? How much is flowing into, say, NPA, SMA2 and SMA1? So the question where I am coming from, just want to sense how much is the incremental stress into this entire pool because of Assam flood, and how much is because of restructure. Yeah.
So let me first give you the numbers. My total restructured pool outstanding, whether it is part of BPD or it is still part of restructuring, is 4,661 crores. Of these 4,661, so 4,900 has become 4,661, which means we've collected about 300 crores this quarter from the restructured pool. Of these 4,661, we have 2,141 which is still in the moratorium, and 2,520 we have customers which have moved buckets. So they will be either part of SMA 0, 1 or 2. So on the whole, if you see, about 70% of the customers are part of SMA 1, 2 or NPA. But that's because of the part paying nature. Though 57% of the customers are paying, we will have these customers move buckets.
Sure. So fair to assume that overall stress pool is going up by 200 odd crores, and 300 is something which we have recovered from restructured. So net the increase is only 500 odd crores in the stress pool, including the Assam impact.
Yes, that's a fair way to look at it.
Okay, so maybe wherever Assam we have seen delays, that would be already pertaining to either the delinquent book or the restructured pool, that would have also got impacted to that extent. And again, Assam, there would be a flow through which will largely come in Q2, because it would have not, maybe that BPD buckets would have not got over. So then again in Q2 we could actually see the real pain coming in from Assam. So would that be a fair assumption?
No, we in fact expect things to normalize by the end of Q2 as far as Assam goes. So we are expecting collection efficiency of back to 97% mark where we were by the end of Q4. So it will not be fair to assume that the June month behavior or the July month, the 1 month behavior, because that was the month when we had floods, that behavior will continue throughout.
If you see that is a Kunal, the Assam collection efficiency 95% other than restructuring loan in June. So in that sense, if we say that the flood has been started in May and up to the June, so that is in one side we see that impact. But in July and onwards, it will be again coming back on that.
Okay. And one last question on this CGT SME. So I think last time you highlighted that we will start the process in this fiscal and we expected recovery in first half. But I think now you said like you will apply in October. So why this delay, and maybe we should see some delayed recovery with respect to that of 25 or maybe 2,500 odd crores which we are expecting, yeah.
No, there is no delay. The process of CGFMU is they process claim only once a year. And they process claim basis the NPA which has happened 6 months back. So if I claim, let's say, I could have done the claim in Q1 itself, but then I would have got the NPA which was NPA as on 31st September or December and not as on 31st March. So my eligible amount to claim would have reduced. So put it shortly, if I claim it on 1st of October, right, which is when I can claim the entire NPA of 31st March 2022, I could claim as around 1,200 crores, 1150 to 1,200 crores. But if I have to claim it today, the claim would not have been more than 500 to 550 crores. So that is why we took that call that we will make this claim in the 1st of October or the first week of October to have the full benefit of 1,100 crores for the year, because we can claim only once a year.
Sure, got it. Thanks and all the best. Yeah.
Thank you.
Thank you.
Thank you. Next question is from the line of Saurabh from JP Morgan. Please go ahead, sir.
Sir, did I get this right that on slide 9 that the overall collection is 300 crores and you're projecting 2,500 crores for next 2 quarters?
Yeah, so we expect that because if you look at the seasonality, the historical trends also, with every quarter, our collection in absolute amount as well as in percentage terms improve. With the Q2 is better than Q1, Q3 is better than Q2, and Q4, of course, is the best for us. So as we move to the second half, the collections should improve materially, and that is why we say that we should be able to recover.
Okay. And secondly, on this interest rate hike, there are a lot of microfinance companies have taken these hikes. And I remember you also took one, but has it started going through your EEB book now?
So as of now, we've not decided on any further hike. We had taken one in September 21. So we will continuously monitor our cost of funds, and if there is a need, we may look at it.
Okay. And just one last thing, sir. On your, so borrowings have gone up sharply this quarter and deposits have gone down. Can you just explain what's happening there?
So, see, in this quarter, we have, the RIDF requirement which was there, that was partly done in Q4 and partly in Q1 of this year, in April of this year. Right, and hence for meeting that RIDF requirement, we have taken the borrowing. And borrowing for us is cheaper because it's a refinance, and it comes at a cheaper cost than the bulk deposits because there is no CRR SLR requirement there.
Okay. And so your outlook for loan growth this year should be in that 20% ballpark?
Yes.
Okay. Thank you, sir. Thank you very much.
Thank you.
Thank you. Next question is from the line of Samir Bise from JM Financials. Please go ahead, sir.
Yeah, thanks for the follow-up opportunity. Just one question. Sunil sir, can you provide the breakup of slippages across business lines?
Yes. Thanks for asking that question because that's the one big positive that we've seen in this quarter. The overall slippages for the quarter was 1125 crores. This number was 1365 crores in Q4. So the gross slippages have come down quarter on quarter. And more importantly, of these 1125 crores, the slippages from restructured customer is about 315 crores. So excluding restructured customers, my slippages quarter on quarter has reduced by half, from 1365 to about 750 crores.
Okay. And just finally, of the balance restructured portfolio, when do you think the entire portfolio comes out of morat?
So by September, everything will be out of morat.
September, okay.
Yeah.
Thank you so much.
Thank you.
Thank you. Next question is from the line of Param Subramaniam from Macquarie. Please go ahead, sir.
Yeah, hi. Thank you for the opportunity. My first question, Sunil, we are budgeting for, in terms of recoveries from the stress pool of 25 billion, which was the same as what we were doing before. But if I'm looking at the collections, including the arrears, that seems to have come off, pretty sharply. So, any outlook? Do you think this number, as in there is scope for a little reduction over here? Your thoughts on that?
No, not really, because, as I explained, that recovery for us is also seasonal. In a sense, the recovery amount is lowest in the first quarter. It increases as the quarter progresses. So historically, if you see last 20 years, Q4 has the highest recoveries and Q1 is the lowest recovery. So we are confident that this year will be no different. And now that the pandemic is behind us, we don't see a challenge here.
Sure. Okay. Thanks for that. And also on the new MFI norms, has it impacted the ticket size of your disbursements? Could you give some color on what your ticket size of disbursements is currently? And has this norm of 50% EMI cap, 50% of household income, has it impacted the ticket size of your disbursements in any way?
I take that point. You know that the last 2 years we are practicing on that. Those are the very seasoned customer and very good business, we are graduated them to this individual as a MSME. So larger ticket, bigger ticket size are shifted in there. So in that sense, we have not find out on that because of new rule, it has come to our help on that to reduce the ticket size. So who are eligible for that loan as a graduated loan, their income of the household is more than 3 lakhs. So that is we like to more help us on that to not making on that. But after that, if you see that my group loan, which is that called the EEB, other than that the individual loan, their ticket size has come 39,819 rupees.
Okay, sir. And what would it be, as in this 39,800, what was it, if I can, get a sense of what it was probably a year or so ago?
It was in a 55,
so that will not be a like-to-like comparison because now we have an individual loan, or we call it small business and agri loans, which is separate, and group loan is separate.
Okay, so the higher ticket customers have migrated to individual, and that's why you're saying the income is more than 3 lakhs. Is that the right understanding?
Correct.
Yes.
Okay, got it. And Sunil, just one last data point. If you could just share the restructured portfolio split between West Bengal, Assam, and rest of India, since we have the SMA and NPA numbers in that, split between West Bengal, Assam, rest of India. If you could share for the restructuring as well. That's my last question. Thank you.
Just a minute. So
my total restructured book, whether they are part of still restructuring or part of SMA, those who have moved out, those whose demand have started, is 4,661 crores, as I mentioned, of which West Bengal is 2,123 and Assam is 1,502.
Assam is?
1,502.
Okay. Thanks, Sunil. Thank you, team, and all the best. Thank you.
thank you.
Thank you. Next question is from the line of Abhishek Murarka from HSBC. Please go ahead, sir.
Hi, sir. Thanks for taking my question. So just one clarification I required on this Assam relief scheme. I think the portfolio eligible for this was around 35 billion or so last year. What is the update here? Is there any progress or any allocation that would have come to you?
If you see that the Assam government has given that 1,700 crores in as on today, which customer are regular. And so that it is not in all customers are demand we have. Second point is here, there is in category 2 and 3, which is overdue and NPA customers. The government is the last budget have been allocated 1,500 crores now, and it said that if further need, they will be again given on that. So that 1,500 crores, that is in tentative time was in this quarter, but because of the flood has come, it has been deferred, and maybe the next quarter it will be come on that.
Okay, so the outstanding portfolio now there is about 1,700 crores, is it?
So this claim is as of March 21, right? So it has nothing to do with current outstanding. The eligibility is of the earlier day.
Okay. And just a few data keeping questions. So can you share the movement of NPAs, as in the write-offs and recovery upgrade as well?
Yeah, so as I mentioned, the slippages, including slippages from restructured pool, stands at 1,125 crores. The recovery and upgrade is 538 crores. So the net addition to NPA is 588 crores. There is no write-off during the quarter.
Okay, and finally, just a state-wise breakup of the restructured MFI. So you gave a overall restructured breakup, just the MFI 2140 crores, if you can give a state-wise breakup.
So 2140 is the restructured portfolio which will come out of restructuring in Q2. In addition to that, what has already come out in Q1, those customers are part of Bpd. So the total restructured pool, the one which is yet in restructuring as of 30th June, and the one which has come out of restructuring, as I mentioned, was 4,661. And I've already shared the top two states, which is 90% of it.
Okay, so just the EEB, you wouldn't have West Bengal and Assam, how much that split would be?
Yeah, so as I mentioned, of these 4,661 crores of EEB restructuring book, 2,100...
Okay, got it. Yeah, got it. Yeah, sorry, clear now. Yeah. Thanks. Those were my questions.
Thank you.
Thank you. Next question is from the line of Anand Dama from MK Global. Please go ahead, sir.
Yeah, thank you, sir. So first of all, in case of Assam, we talked about the SMA pool, but have we done 100% billing in Assam, or the billing is still incomplete?
So when you say billing means the demand,
Yes.
Come out of restructuring, the demand has been started to generate from 1st April onwards.
No, but for the standard pool, would you have done basically the entire billing for this quarter, or because of the floods and all, you would not have raised demand, and because of which that may not reflect even into SMA pool?
We have not stopped any demand even for a day.
Okay, we have not done that. And what is the situation over there? Basically, the floods have receded, the meetings have again started, or like how do you see the collections panning out over next 2 to 3 quarters?
So the meetings have started happening. The collections for July is better than June, and we expect by September we should be back to normal.
Okay. And when you say normal, means that there will be still some stress which will flow into the SMA pool, barring what we are seeing at this point of time, or the current SMA pool itself will come down?
No, it should come down, because as those customers who have already flown, once the repayment starts, the impact of floods goes away. Even the stress pool should reduce. Because if my collection efficiency improves from 93 to 96, 97%, the overall outstanding will also reduce.
Okay. And so is there any scope of, because of this kind of natural disaster being there, that possibly government or basically RBI could allow you to do further restructuring in the Assam specifically?
That is a possibility. If they notify this as a natural calamity, then there is an option to bank to avail that.
Okay, and that basically state government has to notify that is a natural disaster, or the central government?
So state government has to recommend, and then the SLBC will notify.
Okay, sure. And sir, lastly, your staff cost is quarter on quarter higher. Is there any one-off over there, or like this is a new normal that we're going to see?
Quarter on quarter is higher because we continue to recruit people in our non-micro segment. We had increased people in our micro segment previous year as we had to do the door-to-door collection. We are strengthening our retail and commercial banking. The growth coming in, that will be the next growth driver, and also the impact of increments.
Okay, got it. Thanks a lot, sir.
Thank you.
Thank you. Next question is from the line of Karthik Chellappa from Buena Vista Fund Management. Please go ahead, sir.
Yeah, good evening. Thank you very much for the opportunity, sir. Just two questions from my side. Firstly, if we look at the various buckets, whether 1 to 30 and specifically 60 to 90 as well as NPL, West Bengal has seen a far higher increase than the rest of India. Although in your opening comments you mentioned that's because of the restructured pool spilling over, are there any specific factors at play in West Bengal which is making the ratio inferior at least to the rest of India?
Not really, because the restructuring was more in, we've already shared the number. So if the restructured portfolio is more in West Bengal and Assam, the flow to DPD will also be higher from that on those states. And the reason they are part of DPD buckets is because they are paying part installments.
Okay, got it. The second question is on the housing portfolio. Despite the growth actually starting to revive, the NPA ratio still seems to be sticky at 3.4, 3.5%. Why do you think that is the case? And can I also have the restructured number for the mortgage book separately?
Hello, good evening, Suresh here.
Yeah, Suresh, go ahead.
Yeah. So on the housing book, actually, because the recovery efforts could, particularly in terms of the SARFAESI, have been initiated only post September 21 when the Supreme Court embargo came out that you cannot take any coercive action. So the impact is now getting visible, and we should see some improvement going forward. So actually, we have seen some turnaround in the kind of books, but as the restructured pool also keeps coming out and some more new things keep getting added, so overall there is not much of an improvement which is seen right now, but the impact of the recovery efforts that are being seen, that are being initiated are kind of getting visible, and we should see some improvement going forward. So that's in terms of the portfolio. Second question as regards your restructured pool. So we have a total restructured pool in the housing portfolio, which is about 1171. The entire portfolio has come out of the moratorium period because the last pool actually got over in March. So now the entire pool is out of the moratorium and the EMIs have started commencing. And there again, there has been a little bit of a gap in terms of the collections, which again will be covered in the coming months, because after 18-month gap, when you are again going back to the customers, there's a slight difficulty in coming back into the mode or habit of coming to a payment every month. So that's what is the issue.
So the restructured balance per se is zero, but it's either sitting in NPA or in SMA 1 or 2 bucket, or they have started to pay, is it?
Yes, they have started. So those who have started paying, there are also a huge amount of regular customers also. But yes, there are some cases which continue to be in the SMA 1, 2 and a few in the NPA bucket also. But all of them, the EMI has commenced, and the last second tranche that had also been given, which was for 12 months, have also got over, and have the EMIs have started commencing from April onwards.
So Karthik, let me give you a sense of restructured book of housing.
Yeah.
Everything is out of moratorium as of 31st March 2022. And of that, it's less than 4% which has slipped to NPA of the total restructured pool. 80% is still in SMA 0 or current. And the balance 10% is in SMA 1 or 2.
So strictly speaking, out of the 530 crore, which was the fourth quarter balance in the housing book, only 10% is either SMA 1 or 2. The balance is either into NPL or has been collected, right?
Which number are we looking at, 500?
At the end of the fourth quarter last year, the restructured book under housing, was it like something like 5.3 billion?
Right.
And that, you're saying right now 10% of that, which is basically 530 million or so, is still in SMA 1 or 2, whereas the balance either is current or has some of it has slipped into NPA, right?
So 5% has slipped into NPA, rest is current.
Okay, rest is current. And 10% is basically still in SMA 1 or 2. Okay.
Yes.
Okay, this is very clear. Thank you very much, Sunil. Thank you very much, and wish you and the team all the very best for the remaining quarters. That's all from my side.
Thank you.
Thank you.
Thank you. The next question is from the line of Mayank Gulgulia from SBI Life. Please go ahead, sir.
Yeah. Hi, sir. Just follow-up question on CBT MSE. So, like, we will be making application in the month of October, when we will be receiving the fund from there?
So typically in 2 months' time. So in Q3 we should have it in place.
Okay. And one follow-up on the Assam guarantee scheme. So, you shared previously that 1,500 crores was supposed to come in this quarter, which might get deferred to next quarter. This is for 1,500 crores for Bandhan Bank or for the entire MFI lender?
So what Assam government, what we hear, and this of course is from the media reports, right? So there it says that 1,500 crores have already been allocated for the delinquent bucket. So there are three categories: zero DPD, which is over; second is delinquent; third is NPA. So this 1,500 crore is for the delinquent bucket, which they have culled out from their budget, and that is for the entire delinquent bucket. And this was to start in Q2, but because of floods, we understand that they will do it in Q3 now.
And what would be our share in that 1,500 crores?
So about 60% should be our share. Very difficult to quantify exactly, but since our market share then was 60%, we should assume 60% here as well.
Okay, that was helpful. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Jay from BNK Securities. Please go ahead, sir.
Yeah, hi sir. Thanks for the opportunity. Most of the questions have been answered. I just wanted to get the total restructuring number at bank level. If you can provide that.
So the total restructuring outstanding today, as on 30th June, is 5,800 crores.
Which is broadly unchanged, right? Because last quarter was also 5,890 crores something.
No, unless we are comparing EEB to total. Because every quarter we recover 5% of the restructured pool.
Okay, so because the number that I have for the last quarter was 5,890 crores. If you can share the last quarter, if you have that, otherwise.
About 6,150 crores.
Sure, sir. The second question is, sir, on provisions. So total specific provisions at bank level, if I see from gross minus net NPA, is around 5,200 crore. What is the over and above provisions which are not flowing into the PCR at bank level?
The overall provision that we carry is about 8,900 odd crores.
Okay, but this a part of this would be such provisions which are 100% provided, which hence so see you are given 7,600 crores provisions in EEB portfolio.
Right.
This includes specific plus non-specific everything, right?
Yes. Other than the regular standard asset provision.
Right. And the total provisions is 8,900 crores at the bank level, specific, non-specific, everything.
Yes.
Sure. And last two things, sir. Actually, one is if you have the ECLGS number handy for the bank, outstanding or disbursed, whichever way. And if you also have the write-off for EEB for FY22. This quarter it was nil. The write-off number for 22.
Yes. So in 22 we did 3,220 odd crores, 25 odd crores.
Sure. For EEB, right?
Yeah, 3,243 crores.
Sure. Yeah. So and if
And
you
what was
have,
your next question?
sorry, sir, ECLGS number outstanding.
I don't have it handy. I'll check and come back.
Sure. And just to double check, sir, the total provisions is 8,900, of which 52 billion is specific at bank level. So around 3,700 crore is non-specific provisions. Is this right?
You can say that, but I will have to check how whether we've allocated it to a particular, because we normally have allocated some provisions to restructured customers as well.
Right. And what? So if you sorry, what is the provisions against, let's say, 5,800 crores? I think you mentioned some PCR on RSA also.
Yeah. So my restructured book of 4,661, which is the EEB, which is 90% of the restructured book. Against that, I have a 75% coverage.
Sure, I think that ties up then. Okay, great. And last thing, sir, on OPEX. So there is a clear acceleration in the OPEX growth at a time when, of course, the revenue has been slowing down. So how should one look at the OPEX growth in the for the full year, let's say?
No, we are looking at a full year growth of 20%. So clearly, we don't see a scenario where the revenue is slowing down and the OPEX will go up. There is always a timing difference. Once you introduce the increments, immediately next quarter gets impacted. And for us, the growth comes in the second half.
Sure.
Our OPEX to assets continues to be in that range of 2.8%. That has not gone up.
And it should not go up also, right? This is what should.
Yeah, it will not. Directionally, it will come down as my portfolio gets built, which typically happens in the second half.
Sure. Understood, sir. Yeah. That is all from my side. Thank you, sir.
Thank you. Thank you.
Thank you. Next question is from the line of Manish Shukla from Axis Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. Just taking first the OPEX question forward. As the business mix evolves towards your target over the next 3 years, how do you see the OPEX to assets trending?
So we, if you talk about 3 years, we see OPEX to assets at 2.5, 2.6.
Okay. All right. The second question is on net interest margin. Now you have the dynamic of changing business mix as well as rising cost of funds environment. So how should we think of a steady state or normalized margin for you?
See, net interest margin depends on the interest rate environment going forward, right? It depends on how the interest rate moves, how much the deposit cost moves, and how much we are able to pass it on to the customer. But broadly, we are looking at in this range of 8%, plus or minus 20 basis points.
Okay, so despite the rising rate environment and change in asset mix, you think you can hold on to the current level of margins. As the mix changes, you don't see margins trending downwards.
If we talk about FY23, yes. Longer term, clearly the trajectory will be lower, but FY23, yes.
Okay, understood. Thank you. Those were my questions.
Thank you.
Thank you. The next question is from the line of Praful Kumar from Diamond Asia. Please go ahead, sir.
Good evening, sir, and thanks for the opportunity. Just, sir, a couple of basic questions. One, Bandhan is known for extremely loyal customer base. Over the last couple of years, there was a lot of turmoil. What has been the customer attrition at the bank level in terms of, customers that we lost over the last 2 years?
customer lost is normally we are lost in a year-on-year basis 9% normal time. And out of that, in the 5% are we are rejected, 4% they are retired because of the age or they are not like to take the loan further. So this is a normal point of the customer trouble.
That's a normal situation.
Yes.
But sir, now you have a significant book that was in the morat. There was a significant book that is restructured, and in that period, these customers being, not very high on cash flows would need more funds. So how does it happen then in terms of how they fulfill their needs in terms of money requirement?
So as far as we are concerned, we have given them moratorium restructuring. That's the best we can do. Right? So unless, and our policy is one loan. So unless the loan gets cleared, we don't offer further loans.
Correct. So that's what I was trying to understand, sir. Since it's restructured, it's an NPA, and they will need more cash flow. So generally, there has to be customer attrition, which logically has to be much higher in such scenarios because they will go to somebody else to borrow, and we can't top it up in terms of our loans because either it's NPA or morat or restructured.
So that's one way to look at. The other way to look at is, which is what we are seeing, is the customer takes more time to repay. Right? They are under NPA, 73% of them pay, which means they are paying part installments. Similar is the case for restructuring. So they will take longer time to repay their loan, and once they clear their loans, they will be eligible for the new loan.
There is a character
start part team.
There is a character
start part team. Sorry.
Please.
Yeah, please go ahead.
Yeah, so my question is, once they start part repayments, can we give them more loans, or they have to clear a certain threshold before we disperse them, or top up the loans? How it works?
We don't do top-up loans, and we have a policy of one loan. So unless they clear the loans, we don't allow them fresh loans.
Got it. All right, sir. All right. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Nitin Agarwal from Motilal Oswal. Please go ahead.
Yeah, hi. Thanks for the opportunity. So most of my questions have been answered, but just one clarification around the credit cost, which we talked about, that you're keeping the estimates broadly unchanged for FY23. So how confident we are on this? Because if I look at our SMA numbers have doubled on a sequential basis. So what gives us the confidence to keep the credit cost numbers almost unchanged?
So as I mentioned, my coverage on restructured and gross NPA is more than 75%. And on top of that, I have the CGFMU guarantee. And if there is a probability on the Assam Relief Scheme funds as well. And the way to look at, if 73% of my NPA customers are paying, 57% of my restructuring customers are paying, we are confident of recovery from these customers as well. So with all of this, I think we are fairly confident that for the full financial year, we should be in that range.
Okay, sure. Thanks so much.
Thank you.
Thank you. Next question is from the line of Param Subramaniam from Macquarie. Please go ahead.
Yeah, hi. Thank you for the follow-up. Just one, data query. So the RIDF bonds that you have outstanding, so in the annual report you're showing as 3,300 crore. What is it currently, since you said, Q1 also you made incrementally some RIDF investments? And what is the margin impact that we are seeing in this quarter because of that?
So the current outstanding is 5,632 crores. And the margin impact on NIMs because of RIDF is about 20 to 25 basis points.
25 to 30 basis points. Okay. Got it. Thanks.
20 to 25.
Got it. Okay. Thanks, Sunil. Thanks for that.
Thank you. The next question is from the line of Rushikesh Bishe from Money Works For Me. Please go ahead.
Well, thank you for giving me an opportunity for this, but I think most of my questions have been answered. So.
Thank you. Thank you.
Thank you. As there are no further questions, on behalf of Bandhan Bank, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.